Right, jet setters. Well, it's Monday the 4th of October, 3rd of October, 4th, whatever it is. Back from a weekend of a gig out at Orange in central west New South Wales. Beautiful. Nice to get out playing music again. So, as I've said before, one of the things I do is I try and take a fresh look every week, because fundamentally the problem with technical analysis is you are always looking backwards, right? To try and find patterns that will hopefully repeat, right? That's essentially what it comes into, which is fundamentally flawed in itself, right? I mean, that's the crazy thing. Having said that, the reason to basically flush it all out and start afresh every week is that you can get stuck in the habit of you kind of draw some things back here, right? Lines back here. You kind of get stuck in thinking the market's going to do what's been going on back here, without taking into account properly what's been going on more recently. So that's why I do that. This is my kind of first impressions, method, right? What is that doing? This is the bloody technology. So the first impressions is when I look here, we see this big line here. That's a big first impression. Another big one is here. Resistance, support, there, that to me, as I said before, looks very magnetic. Another next impression is here, this gap. These things you've seen before, but they just keep striking me. Another one that strikes me is clearly we've got this downtrend happen where we do have a lower low here, which is lower than that one, and a lower high, lower than that one, and that one. The next one, the big test, is there. The next impression is up here, where there is, I'll probably put the first warning sign is down there, 43.90, and then the last one, when I zoom in a little bit more closely, will be right there. That's a target. If it breaks there, fresh air to the break, to this gap, I'd say. If it breaks here, it would probably break not only this level here, but that trend. That would be a real challenge to the market going lower. If it breaks there, the low case is ruled out. That's the S&P, by the way. When I zoom in a little more closer, you can see how those lines, just those rough lines, right? That was on a daily, right? Just like on a line chart. You can really see how they very closely line up with what we start seeing on a finer basis, like these four hourly. This line, this software thing I'm using, this website, honestly, some of these times they just go totally out of whack, right? But you can see, as I was saying, you look at the daily there, change over to like the bars on a 4 hourly, and it really just does hold, very, very true. And that's why that approach that I use, I stick to it. It's just starting with a clean slate, as simple as you can get, right? No bars, just a line, and the shaded area, to me, it just helps magnify the levels, because of the color, right? It does that to my brain. So this is still unfolding lower. Big test here if it breaks 42.40. If it breaks 43.86, then there's a reasonable chance for it to go up, because it will be going here, going up there. That's the S&P. I'm still short. Let's look at the Australian market. Now, the Australian market conveniently, it kind of leads and lags the US market, and that's why it's nice to trade. I was talking to my broker this morning, Bell Potter. I recommend them. They're good. He basically said, look, if you're going to trade the SPY, you've got to trade the spread to the S&P, which you do. And one thing that happened nicely overnight was in the wee hours on Friday, the S&P rallied. I've got a call level on that, but the Aussie market had lagged. It hadn't shifted. It's like 4 o'clock in the morning on Saturday morning. And because it hadn't moved, I was able to square up my short Aussie position. And sure enough, this morning it's rallied. But that it rallied like 100 points off where I squared it up, right? So that's the benefit of seeing what the US market did. I was short the Aussie as well, short the Australian market as well. Brought that one back and reshorted it at a better level this morning, today as it's come off. So again, so this is starting from scratch here. Just look at the area. That's one thing that strikes me. Another one, it's just like, boing, that high there, which of course, you know, coincidentally comes into really that resistance where we are now. Another impression is this level here. That's still like holding true as a target. I'm still seeing a little bit of a hole in here, very similar to the US, right? I see a really big hole in here that's still staring right at me. And I am still seeing pretty clearly here, this trend is down. It's unfolding, a little bit overlapping, right? Just, right? Like it didn't overlap here, came close. It certainly overlapped in here, but not for very long, right? Let's have a look at it on a 4-hourly, see what we can see. As you can see, those lines, they just hold true very remarkably. That quick look, those first impressions, you don't have to be a genius, you just look at them and say, there's some levels that do hold remarkably true, and that's, for me, is a good starting point. So here you can see where it's had a few goes down here. There is on this 4-hourly a little bit of this negative divergence, which added to my happiness to square up a little bit down, or square up down here. As I said, it's spiked up here, and it's sold off a little bit. Still bearish. The levels that I've got in mind are here. If it breaks there, then I'd be really concerned about it going higher. My warning sign is here. So for me, my next trade in the Aussie will be, if it gets to here, right, I'd short it. Here, I'd stop out. My target is somewhere below here. I don't know what the ratio is there, 72.84 to 73.50, so I've got a 70 point stop on a 72.85 to like a 70.80, 200 points. So for me, that's a pretty good risk reward, to risk 70 points here to make like a 200, 3 to 1, roughly. That's the Aussie, that's the equity markets. When I look at, let's have a look at the gold market, which I'm short. Let's go back to these first impressions. What am I seeing here? Right, first thing is this is unfolding lower. Next thing I'm seeing is there's a trend line through here. And if I extend this, it's rough, but it is there unfolding lower. At a pinch, I could say there's something going on possibly here, but I think that's probably stretching it a little bit. But this is obviously the dominant, line here. This one looks to me a little bit forced, but it is coming to the pointy end of the season. Let's see what it looks like when I zoom in a little bit closer. Yeah, so we just finesse this a bit, right? Take out a bit of the noise, bit of noise there, bit of noise here, bit overs, bit unders. Gold's volatile, right? So I'm happy with that. But there is a bit of this pointy end coming around this 1750, 1760, 1770 level. I'm short. As I said, I've got a target for it to break this 1720 level. If it breaks this trend line, then I'm out, and particularly if it breaks that level, well, if it breaks that level, I'm out. If it hits here, I'll short it with a stop up here. That's what I probably will do, no guarantees. The other thing which I've got in mind with gold in terms of that pattern, right? You can see it back here. It did, it's a total doppelganger, right? Where it had that, trend line, had a couple of stabs at it. Again, there's a lot of noise in here, right? But the general pattern was it was unfolding lower, had a bit of a go here, and then it tanked, right? it really is spot the difference, right? They are remarkably similar. Even this spike here above the trend, that spike above the trend. It's remarkably similar. Where could it go down to? Well, this one, it kind of went really down to some of these previous breakout points. You can see it on these lines a bit better. Down there, this one, it could be like as low as here, which would be a very good technical level. 1400, it's like $300. So if it breaks 1700, then $300. That's what I'd be looking for to pick up on gold. 1700 to 800 to 1800, risking 100. So a similar trade to the other ones, like risk $1 to make 3. We'll see what happens. The currency, Aussie currency. Let's have a look at that. Again, first impressions. Well, look at that, right? And I see this. That's a real topping pattern to me. I'm seeing like a level through here, right, where it's kind of topped in there a couple of times, topped in there, supported off there, came back down. That's like 70 cents, big psychological level, right? I'm seeing that one. I'm seeing another one through here where there's been a bit of action there, through there. There is a bit of noise, but there is something going on around there, up around 73.60 on a wide time frame. I still see it unfolding lower here. That trend line is still intact. This I'm seeing is a potential. That's not negative divergence. So to me, it's not a no-brainer bottom. If this had been lower and we're seeing that on the daily, that to me looks a bit, I guess paradoxically, a lot more bullish. And that's kind of a bit weird, right? If this was lower, but on this stronger momentum, I'd say that's much more indicative of a bottom, and for it to break the trend. Whereas now it just looks like it's a bit of a pause in the selling action. It is still very much in that no man's land where it's been jubbing around, and it has struggled to break that 72 cent level. It had a go, and it rejected it. So it's still, still short the Aussie. Still expecting it to unfold lower, but it is still going to do some work through here, and I will be watching it with great eagerness to see what happens. Obviously similar to gold, right? Reaching a pointy end. The Aussie, the Rand, the Canadian dollar, the Brazilian real, often traded as a proxy for macro commodity risk, right? When I was working for a bank in the US, we had a lot of macroeconomic hedge funds, and they would come through with orders of the Rand, the CAD, the Real, the Aussie, basically all the same direction as a way to play the macro commodities story. So that's where we are with the Aussie. That's where we are with the commodities, with gold at least, and with the equity markets. So I'm still basically a bit of short everything. I haven't mentioned the bonds. I'm still short the bonds. The yields have been coming up. That level is a bit higher than what I had in mind for it to stall. The level that I had for it to stall was here, right? At 141, 142. It's gone through there, doing a little bit of work above it, right? And I guess, in terms of historical levels where it's done a bit of work, it did a bit of work in there, underneath it and above it. But I think the next level for it to be, once it's done this work here, is up there. And if not, it will come down and fill in this thing here. So it's not big moves, right? It's kind of 10 points up, like 49 up to 59. 49 down to 33.6. So it's not big in it. You've got to have a large position on it for that to be material risk. That's what I'm looking at for the futures, for the target. I still think it's going to rally higher. So I've got a long-term short futures position on, which I'm just happy to ride as rates assuming normalise over time. All right, that's it for the start of the week. Have a good one. We'll catch you next time.